This is a smart money flow of the DAX here shown in red at the bottom. I kept saying smart money is about to flush the market, which should add up at new all-time highs. The DAX was ripping like crazy. We ended up on Friday at 21,500, which was one of our major targets, and I prevented my members to short into that. And also the US markets. They made a new all-time high. The S&P 500 did so on Friday, while the others failed on doing the same, which gives us an intermarket bearish divergence in the middle of an astro turning date. I'm Joe from JCS Charting, and let's hop into it. This is my Discord, the main DAX channel, where I give brief analyses about finding major turning points, or we look for major moves here, and most of the data is provided by my partner wallstreetkorea.com. For instance, here's the update from the 3rd of January. The smart money flow had a positive divergence on the DAX. It had the same behavior we experienced at the end of November, beginning of December, and once you understand that, that ripper we had in December was just a matter of time that a similar move like that is going to happen in January, and we ended up, as I said at the beginning of the video, at new all-time highs. That theory was confirmed by the volume, because the volume was increasing compared to the declining volume by a lot, while DAX was just moving sideways during that period. That was from the 5th. And we were hitting that threshold that usually confirms that smart money, and we knew we should run higher into that. And you know, during the week here, I do several more updates. Our topping indicator came up on the 19th, but we are not there yet. Here you see the daily DAX chart, the cash chart. Here you see that pop gun I mentioned in my last update, which faked to the downside, and by now we hit 5 duplications to the upside. Here's, by the way, that major target, which also acts as resistance, 21,506, which we hit on Friday morning. And it reversed, as you can see. I was pulling out a lot of DAX points, over 1,500 points at 21,421 right here, which was also one of our major targets. And yeah, we could run into a little consolidation. It's overdue. All indicators are boiling, but I assume we are not really done yet at the top. We continue with my DAX subcycle chart, which is a 4-hour time frame based on the cash. The same sequence here, the 21,506, we were hitting that all-time high at 21,520. We closed the gap from the day before at 21,411, and there are several gaps waiting to be closed at the downside. However, I assume we see a shallow consolidation here into Tuesday. That is our next suggested subcycle low. There's a gap here at 21,169, which matches a 23.6 retracement of that rally we had since the middle of January. There's another gap here at 21,045, but this could be already enough here to correct that smaller cycle. Last but not least for the DAX, this is VDAX here at the bottom, and the DAXedra daily chart here at the top. We have a nice 9 count to be finished on Monday if we close above 21,042. This is actually likely that this is going to happen. The best case for these 9 counts is that the 9th candle is actually a top. If not, it's not actually necessary. The VDAX here at the bottom, we had a very nice or very strong divergence here at the bottom, which was another buying signal, and now we are running actually into another negative divergence. What we can say is that the VDAX did very unusual things. The previous week already it started rising while DAX kept ripping to new all-time highs. You see that move here, and it actually moved sideways the entire week. while DAX kept making new all-time highs. So volatility is kept at a certain level, which is always a warning sign for a bigger drop. However, I assume that the VDAX is actually dropping further down in the next couple of days. We have a very quick look at the Dow Jones theory. The industrials here at the top, the transportations at the bottom. You can see the industrials are moving much higher than the transportations, and I assume we're going to see a divergence here pretty soon. Again, we are still in the middle of an astro turning date, which I assume is a major topping only. That means it is more or less a week of a correction or several days before we run higher. The last divergence here at the Dow Jones, I was mentioning that in my last video, worked out great, and now we are looking for a negative divergence while the transportations are making lower highs and the industrials make actually new all-time highs. We continue with the Nasdaq. It's a daily chart here of the JFD indication. It's running 45 points lower than the cash, so don't get too confused by these numbers I have in here. First of all, there's that symmetrical triangle, which broke out after triggering it here, and then it was oscillating at that upper trend line for a few days before it broke out and hit the first min target in December. There's an open target at 22,932, still waiting to be hit. And the Nasdaq is also interesting that we have 21,611, which is our green sequence. It got triggered several times during that correction phase here, which I marked as wave 4, for higher targets, which match that 100% target of that triangle. Once we go into Elliott waves, we can identify this here as the first wave. We had quite of a sharp wave 2 correction, and then we had a long wave 3, which didn't seem to stop, and then wave 4, which had basically the same size of the correction as wave 2. It was twice as long, which is quite normal. If wave 2 is short, wave 4 likes to be longer. And then wave 5 started to kick in my point of view, in the middle of January. We had now a pop gun here on the JFD indication. It's not at the cash. It might give us a little fake to the downside before continuing higher to reach these all-time highs at 22,141. JCS charting uses mainly sequences to identify turning points, or if we continue the trend up or down. That doesn't really matter. First of all, that was here the turning point we had on the 13th of January. And you see how accurate these sequences work. 2477 was determined, and 2476 was the actual low. The 138 likes to be turning point. If not, the 161 usually does it. And the same we had on Friday and Thursday. 21,903 was our trigger for actually running higher, and we rejected there now twice. Usually that is not a good sign. If that happens, we usually have a bit more to the downside unless that level gets broken by an hourly or 4-hour close above to trigger that sequence for higher levels. And then we have min targets, which have a very high probability, over 90% of being hit. This is another 4-hour time frame of the Nasdaq. This time it's a cash indication. So the official price levels you're used to. It's another subcycle chart. We try to determine lows here. It's the same what we do for the DAX. At the DAX, it's much more accurate. This one here, we don't have that much research data putting into that system yet. So it still varies in time a little bit. And there was a suggested cycle low actually on Friday, which was just a shallow descent here, and Nasdaq started buying into the close. That qualifies because timing is right here. I still would prefer to close that gap here at 21,566 and to run to do a back test of that Wilbur wave wedge here, that blue one, which has a very steep target line. But you know, Nasdaq can go really crazy once buyers come into that market. So either we have seen that low, but if we keep dropping into Monday's session or early Tuesday, it keeps a buying opportunity to me. Also have these retracements inside. The 38.2 is very interesting because it matches the max expansion of the cycle, that trend line, and this one runs at 21,407. Last but not least, the S&P 500. This is also a daily cash chart. This was a nice rising channel here until we broke that, but I gave my members that hint whenever that break of that channel comes, but it reverses immediately, and if we cross that 100 moving average and we have a close back above it, it likes to do the same thing at the opposite side, and that would actually be much higher than the current price levels. Note that I duplicated that green box, which is in my point of view the first wave, second wave, third wave, fourth wave, which was much longer in time compared to the second, which happens quite a lot. And now the fifth is already going on. That met already the minimum requirements for a wave 5 because we are hitting already new targets. We are over the top of wave 3. It may expand here a bit into time, and also have a look at these patterns where we found the cycle lows. They are in the same time frame always. The next one is due by the middle of February. And this could squeeze even more. Note that smart money hasn't really entered the US market yet. It's not the same as what's happening in DAX. At some point they will pull out their stuff at DAX, but at the US it's running completely different. That's what you need to understand. Last short for today is gold. We were buying gold right here at the end of December because we were going for a secondary low of the primary cycle, which started here, and then we were hitting that major trend line beautifully in our suggested time frame for a cycle low. Since then, gold is moving very clean in these cycles. We had another low which I suggested on, I think it was Thursday, 2735 was the low. We triggered that green sequence. We were hitting that major green sequence. We finished that, and we were triggering 2766 for much higher levels, which are above the all-time highs out of October actually. So I assume also new all-time highs at gold very soon. Yeah, that's about it for today. A bit shorter than usual. I hope you liked it. You can leave me a nice comment. I would appreciate a like as well. And if you want to get more updates during the week in more detailed manners, you're welcome to join at jcs-charting.com for more. The link is in the description below. I wish you a nice weekend, and I see my folks on Monday. Bye bye.